On today's episode of Finance Fridays, I have two brothers. We have Hamza, that's on our Auto Agents finance team, and we have Anas. Anas has been working in mortgages since 2015. He's worked at Desjardins, Home Trust, Mortgage Alliance Ottawa, and right now he is a mortgage agent with Mortgage Approvals Ottawa. So we're going to chat about how getting a car loan can be beneficial or how it can affect if you're looking to get a mortgage. So Hamza, if you want to start off giving your opinion on it, go ahead.
For sure. A lot of times in layman's terms, there's three main different kinds of credit that you can have on your credit bureau, being revolving credit, credit cards, line of credits, open credit, cell phones, TV, internet, and installment credits, which is any type of car loan, personal loan that you're making payments on. When you're making those installment payments, the frequency of payments is building your credit very fast. The same frequency of payment on a revolving credit doesn't build your credit as fast. So a lot of times when you're applying for a mortgage, the closest to a mortgage payment you're going to see is a car loan. So these lenders, when they're trying to make an idea if they're going to approve your file or not, they're trying to see a comparative payment that you've made in the past. That car loan, in most cases, is that payment. So one of the main reasons why I brought Anas on here to kind of help us discuss this is he deals with this on a regular basis and he gets that direct feedback from those mortgage lenders. So can you kind of tell us a little bit how these car loans are actually helping clients get approved for mortgages?
Yeah, certainly. So, yeah, as you mentioned, there's different types of items that you see on the credit bureau. Some are seen when you're applying for different types of credit more important than others. Definitely, when it comes to revolving credit, having a low credit card with only $1,000, it's like you're not showing the lender that you're managing a very high credit. But if you have, let's say, a line of credit or any sort of credit card that's in the $5,000-$10,000 and you always use it responsibly with low utilization, it definitely will help you in a transaction like that. And I do want to segue into the car loan, where it's the same thing. Probably the closest thing to a mortgage, if you've never bought a house or had a mortgage on your file, would be a car loan or some sort of student loan of sorts. But again, student loans, most of them have agreed payments at lower
For
amounts
payments,
for
yeah.
a long time period of time. So really the only one that a bank will look at is a well-paid car loan. So if you had it for a couple of years, 2-3 years, with a loan balance that's decreasing regularly with payments done on time, then the lender will look at that and it'll be, well, this is the closest thing to a mortgage. We see that this client is being very responsible with their finances, and that's definitely going to help you when it comes to applying for a mortgage, certainly.
For sure. Great. That's good feedback.
Okay, so this is all super beneficial. It just shows I really need to get a vehicle finance
Yeah.
to be able to
Well, I
afford a
mean,
house.
everything that we preach, a little bit of personal on me. When I moved out and I relocated, I got a car loan right away. And within 3 years, I owned my own house. If it wasn't for these two different car loans that I got before I bought my house, I don't know if I would have been able to build my credit to be able to buy the house that I wanted. So, we tell people these tips and tricks, but we preach them as well, but we do them as well.
Yeah. Is there any negative effects of getting a car loan when looking for a mortgage? I know we covered all the positives, but is there any negative downside?
Well, definitely. There's some people that are in the market to buy a house, and then they got this nice pre-approval. You're pre-approved for 600,000, considering your household income, and also considering the debt that you currently have on your credit. So that's a big thing. But then they decide, I was like, oh, what about I just buy a car? Like, I'm so excited for this new house. With this new house, I wanted this brand new car sitting in the driveway, and that's where it could be a negative aspect, right? Because now, when we haven't considered this car loan payment into your pre-approval, what happens is now you're decreasing how much you're being approved for. And some of these car loans sometimes, like if you're pre-approved for 600,000, that means you have a lot of room in your credit. So, there's not a lot of, let's say, you'd be able to shop for, I mean, any car and take on that payment. But as soon as you consider that payment with what your potential mortgage payment is going to be, especially with today's mortgage rates, that can definitely affect how much you can qualify for a home. So if your priority is to buy the house and make sure you qualify for the house that you need within the pre-approval amount that you got, I would definitely put purchasing a car to the side. And then as soon as your transaction is done and the house is purchased, at that point, I would give you a green light in going to purchase a vehicle. What do you think, Hamza?
I agree. I think it comes down to being the agent that everyone needs and gathering all the information from the customer just to make sure that we're advising accordingly. I've done mortgages in the past, so if a customer is telling me, hey, I'm looking to buy this car, but I'm also looking to buy this house at the same time, I'm gonna advise them, say, well, maybe you should finish this and we push the purchase until after the house, because the last thing I would want is one of my clients calling me saying, oh no, I can't buy my house because I bought this car. So transparency is very important. We're here to answer all those questions. But furthermore, there's a lot of referrals that happen in our business. So a lot of times if someone is looking to buy a car and I know that they're looking to buy a mortgage as well, I'm going to advise them a certain way and I can pass them off to an agent like Anas so that they do get that kind of 360 approach type of service. So a lot of times, giving us that additional information, we can advise them a bit better. But I do agree. I mean, selfishly, let's be honest, we want them to buy the car, first, but at the same time, we're looking for a client that we're going to have for a lifetime that's going to return for many more cars, not necessarily someone that you're going to sell a car once and then not see them again. So on that point, I do agree with Vanessa.
Okay, what if they're newcomers? What if it's someone that just moved to Canada and they need a house and they need a car?
Mhm.
How would the situation?
See, I guess that's where, we may have a different opinion on that point with that scenario. But to me, I think the first thing any newcomer should do is get a credit card and a car. A car should be a car that's, inexpensive, someone to get a point A to point B, strictly to have a loan to help them build their credit so that year two that they're in Canada, they can go and, get approved for a mortgage. Now, will that make Enes' job harder? He can elaborate.
I don't disagree with you, honestly, because it depends on every person's situation. If they come here with, let's say, for example, they were in Canada, they had some sort of history, and then they left and then they came back, maybe we can use that history to leverage when purchasing a home. So that's something that we have to consider. But every person's situation is different. If you have a completely newcomer, they've lived all their life in Italy, and then suddenly they're moving here in Canada in order to start a new life. If there was some sort of opportunity, definitely they come here. And unfortunately, North America, it's all about credit. Credit is number one, and then income is number two. So it doesn't matter how much money you make. If your credit is not so good, it's definitely going to be difficult to acquire anything. Not impossible, but I said difficult. So definitely making sure that your credit is built in the right way in order to set yourself up for purchasing a home is definitely the priority. Definitely, like Hamza said, you want to favor everything that's going to help you build a strong credit. Revolving credit is one, but as a newcomer, depending on your situation, again, it might be difficult to get high credit available to that. But then, like you said, if you're able to also manage a car loan in the same time and prove to the banks that you're new here, depending on your circumstances and the income that you're making, you're able to manage your finances properly, then there are many lenders on the market that will recognize newcomers and help them qualify and provide them with the financing in order to purchase a home. So there's definitely many factors that come into play, but making sure that you have a strong credit, and they will note that you don't have a long history of credit here in Canada, so it better be impeccable in order for them to mitigate that risk and feel comfortable in order to land on a property here in Canada.
And that's what I mentioned with the inexpensive vehicles, because if we're aware that they're building, and that's some of my newcomer clients, I ask them these questions like, what are your plans in the next 1 to 3 years? Are you looking to buy a house? because a lot of times I'll entice them to put a down payment to lower the loan amount, to have a loan with a low payment. So that way, whenever they do reach out to a mortgage agent, it doesn't affect their debt ratio and what they're going to qualify for as a mortgage. So really, it's about having dialogue back and forth and understanding what our clients' goals are and what they're looking for, and assist them in the best way possible.
I know Anas brought a point that I really liked. I want to ask quickly. Does credit ever expire? Like if you're living in Canada and you leave the country for a certain amount of time and you come back, do you start from scratch with credit or it stays forever?
No, there's
Well,
two
no.
credit bureaus in Canada. There's Equifax and TransUnion. For vehicle loans, we heavily look with Equifax. Now, mortgages a little bit different, but for vehicle loans, we mainly look at Equifax, which keeps your last 7 years. And as you can discuss about TransUnion a bit more.
Yeah, so the credit reporting agencies, they retain for about 7 years history, right? So that's what I mean. It's a case by case basis. So yeah, I'm just saying if you had left for a couple years and then you came back and still hold your residency, then you still have some history from back then. So if there's still some remaining, I'm just saying we could leverage that as a way in order to get the lenders to provide you credit right away. But in the event that your history is too old or no longer present, then at that point, yes, we do need to rebuild credit in order to get some sort of history on your end. Again, like I said, it's a case by case basis. That's why I said that specific case, maybe we could work with something.
A lot of times banks will look at a 3-year, like the last 3 years, to kind of build some type of profile. So we've had clients that, have had struggles, but then found a new career, and then the income turns around and, everything is paid. So if you have a 7-year history and you have 4 years of bad credit, but 3 years of impeccable credit, the bank is not going to look at those 4 years of bad credit because they're going to see that there's a change in behavior and in the credit. So a lot of times it's never too late to rebuild. It could turn in a year or two, you can rebuild your credit if you're surrounded by the right people, right advice, and right choices, of course.
Beautiful. I love this super insightful chat. Thank you so much for joining us both today.
No problem.
Thank
Our
you.
pleasure. All right.